Good morning all and welcome to today's video. I hope you had a great weekend. I have four pairs on watch today and those are pound CAD, CAD Swiss, Kiwi dollar and Aussie dollar. So as always, I'm going to break them down for you from the higher time frames down to the lower time frames, starting with my favorite of the bunch, which is pound CAD. And the narrative as I see it is as follows. So if we just zoom out, you can see that price tapped into an all-time low. And what have I been saying in previous videos? I've been saying that when we come down, okay, and we come close to an area of value, we kind of near miss it. Notice we came down here, we near miss it, we come down again, we tap the previous low, but we near miss it. And then more significantly, this low here, because I'm just sort of seeing this as a separate piece of structure, this low here comes all the way down relative to this move down. Look how far down it comes down relative to this overall move and just narrowly misses that low. When that happens, it's often the case that we will scoot back round in the form of structure, or however we do it, we will come back down and tap into that low. In the majority of cases, break below it, okay, catch people the wrong side of the market, which is what we typically see on the higher time frames before a move to the upside can occur. Most people are waiting for it to tap into this area and then they're looking to get long. When it gets short, many people think that it's just going to keep going, but as I've often said, if it's going to keep going, where is it going to? If we just zoom out, this is an all-time low. Okay, so when people get in, when the professionals get in, they're not just getting in and going, right, I'm just going to short this. They're getting short with a target in mind as to where they're getting out. If they're trading for the banks and they're trading my money and they're essentially trading your money, then they must have some kind of plan as to where they're going to get out it once they actually get in. Okay, so it doesn't really make sense to me for price to be going short here long term, because the bigger players would need some kind of target as to where they're actually getting short to, and you can see there isn't any on the left. So what that tells me that this is likely just a high area of value for a buy, and these down here, once price breaks down here, is just discounted prices for a move to the upside, and that's of course what happens. We then have the natural ebb and flow of the market. We have the impulse correction continuations that we typically look for, and we also have a near miss to the upside. So when I see price break below an all-time low, we come back up and there's a near miss to this area of value here, then the same thing could be happening on the flip side, and we could be pushing up to take out this near miss and tap into this area of value before we potentially either form a correction to push higher or reverse from this area here. And it would make sense that we would reverse, because then we would kind of have this kind of structure, this 1, 2, 3, which we typically see. But as I say, that's for the birds, because that's what happens up here is irrelevant. What we do have is a near miss to there and price pushing up. That's what I'm concerned about. So that means that my bias is therefore longer term, or certainly up to take out that near miss and the high that we near miss to. And what I've been doing on the lower time frames is just separating the structures. So you can see price left a footprint here. It came down, it tapped that area, but didn't break below it. I think we near missed it again. There's a prime example. We narrowly near missed that area. Then we come back in, we tap into it, push up. We have the same thing here. We have a low, price scoops back down, it near misses it. So what I call the FOMO channel. Then we come back down, tap that area, push up. We have the same thing here. Price comes all the way down, near misses that area, pushes up, comes down, taps into it, pushes up. So you can see the psychology. These are psychological patterns repeating themselves, and people say that patterns don't actually work. Well, that doesn't even make sense, because a pattern by definition is something that repeats itself. So obviously they do. Okay, so we have the same kind of thing here. We've tapped into this low here. We come back down. We have this 1, 2, 3. There's the near miss. We near miss that area, push up. Some people try to buy this, whilst others are placing orders in this area, which causes it to come back down. We tag the areas, and then potentially we could be seeing a move to the upside. However, you can see that we have come down with a lot of momentum. So there is a chance, although that's my area of value, you can see we have this 1, 2, 3 touch structure. Price taps into the area, pushes up. Okay, we even have that near miss there. Although we have this clear base now, this area of value, We have come down with a lot of momentum, so that affects my entry criteria. So if I was to just get long here, as you can see some people were doing, then what could happen, given that we have this little inflection point there, which may be clearer on the 15-minute chart for some of you to see. If I was to just try and get long here, or let's say within a flag within here, what could happen, and I've seen this a lot from my documentation, is that price could come up, near miss that hook point there. We come down, we form a middle section, we then tap into that area and then push lower, and then I think to myself, oh, that was an unnecessary loss, because we could see that this was potentially an impulse correction continuation to push lower to maybe tap into, for example, this low here, and we form something a bit more complex. So what I do then to mitigate the chances of that happening, what I'll be looking for, if I just remove that from the chart now, what I'll be looking for, so what mitigates, if I'm looking for a move to the upside, what mitigates the chances of that happening? Well, quite simply, what mitigates it is a push up, an impulsive break above this little hook point there, that little inflection point, followed by a correction. And then the correction afterwards is the confirmation that price isn't going to do what I just illustrated it might do. Okay. And then I would look to get long on the break of the flag or within it. And then I would be able to manage this up to the, to, to this high as a first inflection point for something in the region of 5%. So that is why I have an alert set. If you just look to the right of my screen, I have an alert set just to see if we push up to this area. And you can see we're actually pushing down, which means that we may be getting something more in keeping with what I just illustrated, which is why I would not be looking to get involved until we break above that high. So I have an alert set just below this hook point. If that is not triggered, then I will not be looking to place a trade. So that is pound CAD. I'm going to speed up because I have quite a few pairs to get through. So CAD Swiss on the higher time frames. If we just zoom out, you can see that we've just broken below an all-time low. Okay. We also have kind of a near miss. I'm trying to keep my charts a little bit clutter free, but we have a near miss to there. We also break below an all-time low. You can see this 1, 2, 3 touch structure with this 1, 2, 3 middle section, but we've broken below an all-time low. And how did we break below it? We broke below it by way of a 1, 2, 3. Okay, so this is partly lower down on the list because we do kind of have a near miss to there, but it's so negligible. If you look at that, we kind of did tap that area, but we near missed it, but really by a tiny amount. I prefer it when the near misses are more obvious, because on different brokerage data that may not appear as a near miss. Nevertheless, we have a 1, 2, 3, a structural, a corrective, and a structural break below an all-time low, and you can see that we're pushing up. What does this mean? This is likely a bargain area of value for the buyers to be getting involved, the bigger players. Where would they likely be getting out? I would suggest that as a first target, they would likely be getting out here, and as a solid second target, getting out in this region up here. You can see that last week's close, look how bullish that was. Very, very bullish close, which wicks below this area of value, pushes up, and then closes well and truly above it. Okay. As I drill down, you can see this is slightly unnatural price action. If we're going to move to the upside, we don't normally move up in this kind of corrective manner. We don't normally move sideways for quite this long. So that's another reason why this is partly lower on list. We also have the potential, this is not something that I'll be interested in, but we also have the potential, because of this sideways consolidation, there's also a potential, and this kind of near miss to here, there's also a chance that we may push all the way back down to here to give us a double bottom before moving to the upside. So again, that kind of affects my entry, okay? Because we've moved sideways in a kind of non-progressive price action, and we have these kind of a near miss to here and a near miss to here, meaning that we could be moving to the downside. What that does is affect my entry. So what I mean by that is we have the area of value there. Okay, if we are going to push to the downside, this is kind of the line in the sand. So what mitigates the chances of this pushing to the downside? Well, quite simply, I don't know why all my stuff's down there, but what I'll be looking for is if price moves sideways. I've drawn it above there, but if this correction forms through the area of value, then that's fine. But I specifically want to see a 3-touch correction, which is likely wouldn't be ready by the end of the day. If you look at the bottom of the screen, that would likely be ready by Tuesday. I've just kept this on my forecast, on my list of pairs. So if we got a 3-touch correction, then I would be looking to get long with a risk entry within the flag. I wouldn't be looking for a reduced risk entry on the break of the flag. When we've moved up like this, and it's quite a large move up, I typically look for risk entries. My plan says that I look for risk entries within the flag. We've had a series of corrections here. So when we've had a series of corrections, I'm not looking for a reduced risk entry on the break of the flag. And that's specifically because these can turn into larger versions of themselves. And if you look for a risk entry within the flag, then if that actually happens, you have more of a chance to manage the trade if price comes down and forms something more complex. So if we get a 3-touch correction, you can see if we push up from there, then we'd have the first touch. And if we got 3-touch correction, then I would look to get long within the flag specifically, and then I'll be able to manage it up to this high here as a first target for something in the region of 4 to 5%. So that is CAD Swiss. Moving on to the next pair, I'm going to set what I'm going to do here on the fly is I'm going to set an alert to see if we can push up and start to form, to see if we push up so that we have that kind of first bottom. If that does not trigger, then I'll not be looking to place a trade. Let me just remove the path tool from the charts and move on to the next pair, which is Kiwi dollar. So if the DXY, the dollar index, is moving to the downside, then it's likely that Kiwi dollar, the Kiwi dollar itself will rally against the US dollar. So on this one, you can see that we have a near miss to this low, which is partly why this is lower down on the list. But we also have a near miss to this high here. And you can see that we have broken below. It is negligible, but we broke below this little inflection point there. We had the near miss to that inflection point, giving me a clue that this is potentially the area of value. We come back down, we tap into the area, we push up. Not the greatest price action. We don't normally see these steep pullbacks so much if we're going to rally to the upside. But again, you can see that we are well and truly in a run of momentum to the upside. We kind of have this impulse correction, potential continuation to take out this near miss and the high, which we near miss too. So just seeing this as an impulse correction continuation to push higher. And if I just zoom down, you can see that we kind of retested this high here by way of this kind of 1, 2, 3 touch structure. We tap into the area, push up, and then we break out of all of this consolidation. Okay, so I'm just seeing this as a separate piece of structure to what's forming now, which means that once I drill down, I can analyze the lower time frames a little bit more clearly. And what has price done? Price has left us with a footprint. It's come back down. It's left us with a footprint there. It's come down, near missed this area. It's come down, near missed it again. And we've moved up in a fairly non-progressive way, meaning that I'm just seeing this as a potential move to tap into that area to give us that 1, 2, 3. And then I'll be looking for a move to the upside. So I will be looking for price to tap into that area, followed by a push up. Specifically in this instance, this a push up back above this low here, because then we would have washed out all of the liquidities that was there and all the liquidity that was there. If I was to look to, if this flag was to form here, for example, if we were to push below, push up, and then flag below here, then potentially we could be retesting the back end of this, given how price has moved up overall, and then you'd be potentially tagged out for a loss, and then potentially price does something like that and pushes lower. So by waiting for a push up above the most recent low as well, okay, then you mitigate the chances of that actually happening. So that's what I'm going to be looking for. Again, this may not be ready by the end of the day. I haven't placed a trade for I don't know how long, about 6 weeks, but that's because literally nothing is shaped up, but that's absolutely fine. I don't care about that. I care about whether I stuck to my rules or not. So that is Kiwi dollar. That's what I'll be looking for from these pairs today. And moving on to the last one with 5 minutes left. is Aussie dollar. Okay, so Aussie dollar on the higher time frames. This is partly lower down on the list because you can see that we kind of have a double top there to some degree. This is not. It's more to do with the fact that this low is much closer to this low than if we just look at Kiwi dollar. So this reacted from an area which was much further away from the near miss and the low which we near missed to. However, with Aussie dollar, we reacted from a low which was much closer to the overall low. Okay, so I'm just seeing this as potentially it's more likely that we could come down to here to give us that before that move to the upside to take out this near miss and this high which we near miss too, making this slightly more risky. Okay, but nevertheless we did tap into this sharp move there. We have a sharp move down followed by a sharp move up. We tap into that area. We didn't really break below it. If we just look at Kiwi dollar, we did actually break below the area of value. So that's another reason why Kiwi dollar is slightly further up on the list. However, when we separate the structures, you can see that we kind of moved out of this consolidation, kind of retested it, pushed up, and we are well and truly in a run of momentum to the upside. And of course, as I said, if the dollar index sells off, then Aussie dollar will likely rally. Okay, just from a correlation point of view. We do have a near miss to this low. This is another reason why this is lower down on the list. Notice that this low kind of near misses here, and this low certainly near misses here. However, we then pushed up with aggression. And if we just analyze what's happened since, so we broke above here. We kind of have this little hook point there. We then have this 1, 2, and then potentially this 3 move, just as with Kiwi dollar. We potentially have a move where once again we're getting some momentum there. If this just rallies to the upside, I'm not bothered. Okay, but if we come down to here, tap into this area, and then push up once again above this low here. So just as with Kiwi dollar, if we push down to here, push back up, and then flag above here, then I will be looking to get long on the break of the flag or within it, and I'll be able to manage it up to these highs for something in the region of 4 to 5%. If this just keeps going to the upside, then I'm not interested in placing a trade on this pair until the market shows its hand and gives me a little bit more developed structure to work with. And if we got something like this, one of the reasons I'm looking for this is because it would be proportionate to this impulse up which has preceded it. So I'm always looking at whether the corrections are kind of proportionate. If we just look at that, we would have pulled back about 40% of this move, give or take, which would be what we deem to be a healthy correction. So that is Aussie dollar. I have not set any goals for myself. Usually I'm attacking my daily goals. I haven't set any goals for today because I've got a lot of Christmas stuff to get on with, a lot of things that I need to get up to date with, and some Christmas cards that I need to post. But I will nevertheless be checking my alerts if they trigger to see if any of these entries shape up, and I will be on the ball as long as I'm at my charts or near my computer screen so that I to potentially place a trade. But that is what I'm going to be looking for today, folks. I hope you've enjoyed this video, and I will be back with another video most likely tomorrow, and I shall bid you a great day and speak to you again soon. Thanks for watching.